Industries after reporting a set of numbers that were much better than street estimates. Prayesh Jain of IIFL joins in now to track this stock for us. Prayesh, good morning. The GRMs this time came in at a 6-year high of $10.4 a barrel, so that will be taken well by the street. But have you scaled up either your target price or your earnings estimates post the numbers?
Yeah, the numbers are definitely better than what we were expecting, especially on the GRMs. We were expecting a sequential decline from a $10.1 reported in Q4, and they've delivered 10.4 because the benchmark GRMs had fallen. But stronger gasoline spreads and the better savings on energy costs helped them report that $10.4. But going ahead, we expect some weakness on the gasoline spreads as the driving season comes to an end towards the later part of this quarter, the current quarter, and some refinery outages that were there come back on stream. So in that sense, the GRMs could taper down a bit towards the second half of this year. Overall, long term, we expect the GRMs for Reliance to be in the range of around $9 to $10 per barrel in the next in this 1 year, and next year onwards, when the petcoke gasification starts, you will see an incremental $2 to $2.5 per barrel. So with all those things in picture, particularly for refining, we've not raised our FY 16 and 17 estimates materially, and we've retained our 2-year price target of 1300 on the stock.
Okay. How do you expect the subsequent quarters in terms of GRMs? Will it be able to maintain this kind of a run rate? In fact, general EBIT margins itself.
See, as I mentioned before, in the refining segment, there were some shutdowns that had happened globally in this quarter, which are expected maintenance shutdowns, which are expected to come back on stream in this quarter. So that will bring some additional supply. On the demand side, we have not seen any major slowdown. In fact, in spite of China slowing down, the petroleum product consumption overall has not slowed down at the same pace. So in that sense, the GRMs are not likely to fall at a dramatic pace, but we might see some slid in the coming quarters, especially in the next couple of quarters.
Okay. On the petchem margin front, it was stronger than expected at about 12.5% this time. What is your forecast for the quarters to come? Better margins there?
Here again, the petchem margin surprised us. We were expecting it to be EBIT margins to be in the order of around 11%. They delivered some more than 12%, and this mainly was because of strong polymer spreads, which again is like because of shutdowns and some delay in capacity additions, especially in Middle East and China, which are expected to come on stream in the next few quarters, which will put some pressure on the polymer side of the business. The polyester side of the business is already under pressure, and might see continued stress. But for Reliance, FY 16 might see EBIT margins of in the order of around 11.5%. But the main kicker would come in from next year when their off-gas cracker commences operations partly, and their new capacity start operations, plus their ethane imports start. So all these factors will drive substantial improvement in EBIT margins from FY 17 and FY 18. So all those things look good for the petchem business.
When are you factoring in returns from Geo and the other non-petchem oil and gas businesses?
See, the retail business is already profitable and has been showing improved trends on a sustained basis in the past few quarters. Geo is like they're launching it in December this year, so the first full year of operations would be FY 17. So next at least 3 years we expect it to be loss making at the EBITDA level, and it's only in FY 19, FY 20 onwards we might see some contribution at the EBITDA level.
All right, then we can wait for that. Thank you very much, Prayesh Jain, for taking us through all the divisions of Reliance Industries. Bullish on Reliance, that's the word coming from Prayesh Jain. Prayesh's disclosures ran for you, and this is our own disclosure yet again. Reliance Industries owns Network 18 and TV 18, the companies that operate this channel. Okay.